Good morning, ladies and gentlemen. Welcome back to your morning watch list. For some reason, the camera decided not to work today, so there's some technical difficulties, unfortunately. Story of my life, but let's get rocking and rolling here. So as you guys can see here, the market has taken a pretty big turn for the worst. So you pretty much should be expecting we're going into maybe some more bearish moves, all right? So this drop happened last night after the Federal Reserve came out and pretty much told everybody they were going to leave interest rates the same going forward until probably 2023, and essentially they want to ramp up inflation. So in other words, what they just said is they're going to leave interest rates really low to try to incentivize people like you and me in the everyday world to take on debt, to take on loans, hoping to spur economic activity and in result should inflate prices. So a simpler way of putting this is with interest rates being really low, it is cheaper for you to take a loan to buy a car, to buy a house, and they're hoping that people will buy houses and buy things with interest rates being so low. And in doing so, it can spur economic activity. Well, the more people go out and purchase, the more likely prices are to increase, which results in inflation, which they're trying to get to 2%. So that all happened yesterday, and you can see the market has taken a turn for the worst here. Now, what I want to go and do is show you the daily chart here on the S&P 500. For those of you that keep up to date with our morning watch list, you're going to know that we have been suggesting that this price here of about 342, arguably 343, was the daily chart trending resistance. And until the market could successfully cross over, say, 342 to it's more like 343, and successfully hold above those levels, we were still in a position where we could see some negative or bearish moves continue. And then, of course, with the news that happened last night with the Federal Reserve, they pretty much just kick-started it, injected adrenaline into the market to the downside. So if we take a step back and now we look at the 4-hour chart, there's really nothing about this drop that is bullish for the time being. If we look at the 4-hour chart, we currently have no trending resistance. The only thing we actually have is previous price action support that you can argue starts from like 333 all the way down to 330s. But for me, in regards to this time frame, we don't actually have any low risk buying support down until about 324. Now let's check the daily chart on the S&P 500. On the daily chart S&P 500, we have a half standard deviation support system that comes in at 330. So for right now, this 330 mark is the nearest or closest short-term resistance. Now, many times, the level that I just told you at 330, 330.60 or so isn't always going to be the strongest support. The stronger support would actually be the one down here at 323 and also at 318. So there is still a good chance we can see this market decrease, because if I wanted to buy the market, again, I wouldn't even consider a long play until A, it gets to 330, which for me would be sort of a weaker support system. And then B, again, stronger supports would be down here at 324 and 318. So for me, it would make more sense to put on risk for a bounce play or sort of a reversal long sort of attempt down starting at 324 to 318. Now, we know that much of the market's been carried a lot by tech stocks. So if we go take a look at the NASDAQ, we want to see where is the NASDAQ support at, because again, the NASDAQ is comprised of many of those big tech stocks that have the biggest market cap. So if the tech stocks and some of these bigger market cap stocks continue to decrease, of course, that's going to negatively affect the market, but it will probably have more pressure on the NASDAQ opposed to maybe say something like the S&P 500. Now, basically what I just described to you could be, so detailed and or, such a detailed thing that at the end of the day, can you really even tell the difference for the average investor? Maybe not. So maybe I'm talking more than I need to. But at the end of the day, if we look at the daily chart here on the NASDAQ, we have our support system at about 10,943 here. Now, if we go to the 4-hour chart, we'll be able to tell if that level is being tested. And so far, it's not, okay? But, I can't actually give you an accurate reading on this, so I do apologize. I can't see the pre-market data on the NASDAQ. But nonetheless, what I can show you is this daily chart activity. Right now, we have a level here at 10,942. If in the event that crosses or breaks, we don't really have a whole lot of trending support system that the market would actually try to bounce on the NASDAQ. Again, arguably until 10,600 to 10,300. Okay. Now I want to take a peek over at the Dow Jones. If we look at the Dow Jones since the pandemic has never successfully crossed back into an uptrend. And you can see the NASDAQ actually does appear to be rolling over. Now, the interesting thing here is that the Dow Jones is downtrending. So to put it simply and to speed this up so we can get this video out to you guys before market open or closer, is we don't really have much trending support on the Dow Jones until about 257 and or 263. Okay. Now what I want to talk to you about are a couple stocks that are moving today or had been moving, one of which is SRNE. Now SRNE had some news, I think, regarding maybe a vaccine or something, therapeutics. So they get FDA clearance, clinical trial, antibody, coronavirus. So it's something regarding the coronavirus, okay? So you can see we have made a great bounce. We just ripped up today, and we have crossed over the regression trend. So we have started approaching one standard deviation or close to on the 4-hour chart. So for right now, the 4-hour chart has resistance at 1266. The question remains, did we hit a daily chart resistance before that? And really, no, we haven't. So as a whole, I would say right now, your $11 mark to, or excuse me, I did that incorrectly. Let me rephrase that. Let me go back. So right now, our next nearest trending resistance on SRNE is going to be about $12.60. If we go back to the daily chart, we may possibly have support $11. Okay, so you can see we dropped down just below $11. We creeped back up and over it, and now we are testing the regression trend on the intraday channel. So nonetheless, if in the event SRNE continues to have a good day, we're going to say that the first resistance mark on the day is potentially up here at that 1272 mark. Something else that has been moving this morning was KODK. Now, this was the penny stock yesterday that jumped and it crashed, and it jumped and it crashed. I was an active short seller on the stock yesterday, and I've already taken a small short on it pre-market here today. Now, the question really remains, can this stock actually squeeze out? This was a stock that went to like 60 bucks, then it crashed, and so there has been some activity here, and there are a lot of people shorting the stock. So we know there are people that are actively bearish and or shorting, which then obviously means there are potentially traders that you could squeeze to the upside. What I want to show you is why we rejected and why I shorted here at 904. All right. If we go and take a look at the 4-hour chart, you can see yesterday we kind of pushed up, sold back down, and what has happened this morning? We had one candle, right, on this 4-hour chart, and again, this is just a different view. So we had price on the stock KODK reach all the way back up to the trending resistance, which again was right around that $9 mark. You can see that trend coming in. Price drops out, we bounce back up, we tag that level for the first time since yesterday, and you can see the price of the stock ended up selling right off, okay? So if in the event this market on KODK was going to go long bias or squeeze and have sort of a big jump, we would only anticipate that can really happen if price action successfully crosses through that $9 mark. Not because it's $9, but because that is our nearest 4-hour trending resistance. That is where we would have to cross for the bulls to actually take on sort of the control in this move within the short term. All right. Now where we're going to go is take a look at some of the bigger players, Tesla and or Apple. So for those of you that follow the channel, you will know that we said that this was going to be your resistance mark starting just the other day. All right. Markets moved all the way back up into the 4-hour resistance for the first time. You would typically trade opposite. So the short worked initially, and then the markets got hit with bad news and tanked, which is causing Tesla to drop out even more. So right now on the 4-hour chart, we have a potential support bounce that can occur here at $4 or $4. I wish Tesla was $4, but we have a potential bounce point at about $409 today. Now let's check the daily chart. Daily chart has no trending resistance, that's really close. So we would pretty much target, again, that first bounce point on the 4-hour chart, which is the half standard deviation, okay? So do take note that about $409 can be your first sort of point where people try to come in and bounce this market. Now, what you have to understand about support levels and or resistance levels is they can very easily break if in the event your overall market, the S&P 500, the Dow Jones, the NASDAQ, if the overall market is seeing extreme volatility and or extreme selling pressure, the likelihood that a Tesla support that we just touched on holds true is less likely. Again, if the overall markets are selling off extremely hard, then most of the other stocks are just going to follow suit and follow the markets down until the market finds support. So again, if in the event, as we stated, the markets continue selling off and they really don't bounce until down here at 324 and 320, then you should just anticipate that the stock Tesla would probably continue to sell down. You should anticipate that, say, Apple would continue to sell down, because as soon as the big markets start to go one way or the other aggressively, most of the big stocks in the market are going to follow suit. Like father, like son, right? A lot of you guys growing up, if you had, great parents or, what have you, right? A lot of kids, they try to grow up and be somewhat like their dad, right? Or they try to grow up and be somewhat like their mom. The common saying, the apple doesn't fall too far from the tree. Same thing here. Again, if the big markets are selling off, then most of these stocks are going to follow suit. So as soon as the markets find support, then the stocks will find support. So whatever you think is support on your stocks can get blown through if the market keeps blowing down. And then your stocks will bounce when the overall market bounces. So if we take a look here at Apple, you guys will notice that we said it can get bearish. We are still not out of the water yet. And you remember from the past couple days, we suggested that this is the first bounce spot around 110 for Apple, okay? If this breaks, which I'm pretty sure it will, you're probably going to see Apple decrease all the way down to your next level at 106. Now, 106 will probably be a little level where the markets try to bounce Apple, okay? Because that is a stronger trending support level. So that being said, we're pretty much bearish on most stocks for right now, given the fact the S&P is getting a little shaky, ladies and gentlemen, all right? So you can see we have the 333 mark that bounced this morning. Remember, that 333 mark is the daily chart half standard deviation level 333, right? Or wait, no, we haven't gotten there yet, excuse me. So that for me is kind of the target on the SPY around 330. That would make sense for us to maybe go back down and retest that. So ladies and gentlemen, that is your morning wrap up, your morning watch list. I hope you guys learned something new. I hope you like that. Make sure to leave a thumbs up and I'll see you guys on the next video. Everybody take care. Have a great rest of your day.